The Foolproof ETF investment strategy for young professionals. A practical 10-year guide to dollar cost averaging with ETFs. Part 1. The first step in investing. Why ETFs? Why dollar cost averaging? 1.1 ETFs. The easiest answer to diversification. For young professionals taking their very first step into the world of investing, ETFs, exchange-traded funds, are widely regarded as one of the most accessible yet effective tools. ETFs are funds designed to track the returns of a specific index or asset class while being traded on the stock exchange, just like a single stock. In other words, with just one click like buying a single share, you can effectively invest in hundreds or even thousands of top companies. That's the core value of ETFs. ETFs offer several advantages for beginners. First, ETFs allow investors to participate in overall market growth without being directly exposed to the specific risks of individual companies, such as bankruptcy. If one company performs poorly, gains from others help offset the losses. Second, ETFs are known for their very low expense ratios. For example, the expense ratio for SPY, which tracks the S&P 500 index, is only 0.0945% annually. Competing funds sometimes go as low as 0.01%. Over the long run, such low fees play a decisive role in maximizing compounding returns. Third, ETFs can be freely bought and sold like stocks, making them highly liquid. Especially highly traded ETFs like SPY are unmatched in trading convenience. 1.2 dollar cost averaging DCA, the fail-proof strategy. That ignores market timing. The cornerstone of any fail-proof investment strategy, as recommended by countless experts, is dollar cost averaging DCA. DCA means investing a fixed amount of money at regular intervals, e.g. monthly, regardless of asset price fluctuations. Its greatest strength: it completely eliminates the stress of trying to figure out when to invest. Predicting market bottoms is nearly impossible even for experts. By abandoning the attempt to time the market, DCA often leads to even stronger results. DCA also provides psychological benefits. Beginners often panic and feel tempted to sell when the market drops. But DCA forces you to invest a fixed amount every month, turning market downturns into golden opportunities to buy more shares at cheaper prices. When prices fall, you buy more shares. When prices rise, you buy fewer. Over time, this lowers your average cost per share. That's why DCA is one of the simplest yet most powerful weapons against market volatility. 1.3. The magic of compounding and the power of time. The final ingredient for investment success is time. The reason long-term investing works is because of the power of compound. Interest earning returns not only on your initial investment, but also on the returns that investment generates. Like a snowball rolling downhill, your assets grow exponentially over time. The longer you invest, the more powerful compounding becomes. Short-term market movements may seem unpredictable, even driven by luck. But history shows that while markets fluctuate in the short run, they tend to rise steadily in the long run. By committing to long-term investing, you reduce the role of luck and harness the market's natural resilience and growth. The following case study demonstrates how these principles work in practice. Part 2. The 10-year journey. The $400 miracle with SPY and QQQ. 2.1 case study. Setup August 2015. August 2025. This report is based on a hypothetical scenario: a young professional who invested $400 every month on the last trading day into SPY and QQQ from August 2015 through August 2025. Total investment period 120 months. Total contributions $48,000. All calculations use actual end-of-month closing prices. 2.2. SPY. A decade with the S&P 500. SPY tracks the S&P 500 index, composed of 500 large-cap U.S. companies. It reflects the overall U.S. economy, offering relatively low volatility and stable long-term performance. At the start in August 2015, SPY closed at 166 scares XI 63. With $400, the investor bought about 2.4 shares. By March 2020, during the COVID-19 crash, SPY fell to 238.94 fours. But because of consistent monthly investments, the investor acquired significantly more shares at this discount. In 2022, SPY went through a year-long decline, but steady contributions lowered the average cost basis. From late 2023 through August 2025, a strong market rebound dramatically boosted the portfolio's value. 2.3. QQQ. A decade with the NASDAQ 100. QQQ tracks the NASDAQ 100 index. Composed largely of tech giants like Apple, Microsoft, and NVIDIA, QQQ is more volatile than SPY but also offers higher growth potential, making it a high-risk, high-reward investment. In August 2015, QQQ closed at 96.59s. With $400, about 414 shares were purchased. Like SPY, QQQ plunged in March 2020 to 184.30, but then staged a powerful V-shaped recovery, nearly hitting $400 by late 2021. The 2022 downturn hit QQQ harder than SPY, but consistent DCA meant the investor accumulated even more shares at low prices. By 2023-2025, the tech-driven rally propelled QQQ far ahead of SPY in total returns. Part 3. Comparing the results, data, and insights. 3.1 SPY versus QQQ 10-year performance. Final results of $400 monthly investments over 10 years. ETF total contributions. Final portfolio. Value. Total profit ROI. SPY 48 NAV 400. 170 93 and 29 58 929 T1.75%. QQQ 148 than for 100 30 591 82 91 69 82%. Both ETFs achieved outstanding returns. QQQ outperformed SPY by about 23,462, driven by the explosive growth of technology stocks over the past decade. 3.2. No losers, just different strengths. Both SPY and QQQ are excellent choices for long-term investors. SPY. Best for those seeking stability and steady returns, tracking overall U.S. economic growth. QQQ best for those who can handle volatility and want higher growth potential through tech-driven exposure. The key takeaway investors should choose based on their risk, tolerance, and long-term goals. Some combine SPY with QQQ or others like SCHD to balance stability and growth. Part 4. Practical guidelines for long-term success. 4.1. Must know. Tips and checklist. ETF alternatives. SPY has high liquidity, but higher fees, 0.0945%. Long-term investors may prefer lower-cost alternatives like IVV or VOO. QQQ alternative. QQQM offers nearly identical holdings to QQQ, but with a lower share price and lower expense ratio, 0.15% versus 0.20%. Ideal for smaller, consistent investments. Trading costs. Overseas stock trades often carry higher fees. Compare brokers carefully and take advantage of fee discount programs. Trading hours U.S. Markets trade overnight in Korea. Remember, daylight savings time shifts trading hours by 1 hour. 4.2. Don't forget taxes. Capital gains on overseas ETFs. Profits from selling overseas ETFs are subject to capital gains tax in Korea. Tax sale. Price. Purchase. Price expenses. Deduction X 22%. Deduction 2.5 M per year. Tax rate 20%. National 2%. Local 22%. Example, Sale price Kimstein M. Purchase price 10 mer. Capital gain 5 M. Deduction 2.5 mer. Taxable amount 2.5s. Tax due 550,000. Taxes must be filed and paid between May 1st 31st the following year. Losses can offset gains in the same tax year. Part 5. Final thoughts for those just starting. This 10-year case study proves key investment truths. Market timing is meaningless. DCA outperforms attempts to predict highs and lows. Time and share count are your greatest allies. Long-term investing harnesses compounding and overcomes short-term volatility. Volatility is not the enemy. Downturns become opportunities to accumulate more shares cheaply. Investing is a marathon, not a sprint. Success comes from discipline and consistency, not complicated analysis or luck. SPY and QQQ show that anyone can achieve strong results. By following these simple principles, if you're ready to begin, start today with even a modest amount, like $400 a month. With the right strategy and persistence, the path to fail-proof investing is wide open. Leave your thoughts in the comments. If this video helped you, don't forget to like, subscribe, and turn on notifications. See you in the next video with another exciting topic. This has been the channel It's Never Too Late to Start.